Welcome to Libertex. Is the April run-up for gold over? As we get closer and closer to May, gold is starting to show bearish signals that come on the verge of an increasingly rapid vaccine progression, a stronger US dollar, and elevated interest yields coming into play to cool off some of the recovery we've made with gold since the start of the month. In our last gold analysis video at the start of April, gold was trading at levels not seen since the summer of 2020, before gold rallied to highs. While gold traders did get a serious bounce back to the upside, some are getting nervous that this could be the end of the run as we enter May. We'll be diving into all of that and more, so make sure to stick around until the end of the video, as we'll be taking a look at the gold technical charts to speculate on where gold can move from here, and whether or not there is much upside potential left for the yellow metal. And if you'd like the latest breaking updates on assets like gold, silver, the top crypto movers, stocks, and more, make sure to support our efforts and growth by hitting the like button and subscribing to our channel to stay ahead of the trends. So without further ado, let's get started with gold for May 2021. As the markets advance towards May, gold is currently trading in the range of $1,760 and $1,800 an ounce, teetering towards the downside and testing support. The price action comes as US Treasury yields hold recent advances, along with the increased strength of the US dollar we have experienced since the start of April. To get a reversal out of the forming downtrend currently shadowing the gold market, a lot of hinges on the outcome of the upcoming Federal Reserve announcements concerning the current nature of the bond buying program, since economic recovery is showing signs of increased speed. On Wednesday, April 28th, US President Joe Biden is set to address Congress and is expected to go over the details regarding stimulus updates and expectations. Major news surrounding updates to increase spending or a reduction in the stimulus will likely be translated into the gold market and influence prices for better or worse. Many gold traders have been bracing themselves for this update and will likely be more focused on Federal Reserve Chairman Jerome Powell's comments on bond purchases and the allowance of inflation. In addition to the upcoming events that will exert influence over the prices, from a technical analysis perspective, gold appears to be making some interesting moves. Let's now have a look into the technical chart for gold to get a better read on where we can possibly see gold going from here as we enter the month of May. Alright, we are now in the Libertex terminal looking at the technical chart for gold. And if we just look at the 3-month overview, we can clearly make out a beautiful 7% run-up gold accomplished since the start of April. But if we examine how gold has been trading more recently, there's certainly some reason for concern. Now, that concern has a lot to do with the way the overarching market is acting, with recovery primed on the horizon, accelerated vaccines, and for now, a stronger US dollar. All of these things, while positive, can come in to push gold prices down as more confidence returns to normal markets. That being said, with where we are currently trading around 1766 an ounce, we can identify that gold made this sort of double bottom pattern here, which gave rise to the reversal that we may be coming off of at the moment. The nearest level of support to watch out for from these levels can be found at 1763.5 and then to 1760.8. Because this 1760.8 level is part of the 50% fib retracement level, if this support fails to hold, it is within the realm of possibility that gold could experience a drop to the 1737.9 range in the short term. On the other hand, a move over 1781 will signal a greater presence of buyers for the gold market and could have the potential to get gold to the next resistance level found at 1788.5 and then onwards towards the greater level back above $1,800 an ounce and then at 1817.60 an ounce. But so much depends on the outcome of the Federal Open Market Committee meetings this week, with the chance to achieve a break to the upside with broader market support. Leading up to this, gold has faced a decent amount of pressure and any strong decision has the potential to ignite an equally strong reaction for gold in the markets. It's therefore advisable that if you are entering gold as a buyer, to consider setting stop losses at some of these levels, and also take profits at some of these levels up here if it does manage to get a break. Do you think gold will continue falling, or will it make a break back to the upside beyond $1,800 an ounce? Let us know your thoughts and price predictions for gold in the comments to join the conversation with our analysts and community. And if you're interested in taking up positions with gold and trading it, whether for the long or short term, Libertex makes it easy. Simply head over to libertex.com or via the links in the description to make a free account in just a few minutes and get in on the action. Not only do we offer gold, silver, and the other metals, but also the top cryptocurrencies, stock CFDs, forex pairs, and more. We hope you enjoyed this updated gold price forecast video as we enter May, and that it gave you a bit more insight on where we could possibly see gold trading this month. Make sure to like this video to help us make more updates and support our mission to give traders a sharper edge. We wish you a great month of trading and look forward to seeing you next time.